Well, we've had a couple of days post Jerome Powell's Jackson Hole hawkishness to just take a step back and try and assess as to what could happen in the near to the medium term to equity markets. Who knows, really? That's the answer. But let's try and take stock of the situation as it can be seen by zooming out a little bit, right? So what happened? Jerome Powell said that in simpler terms that interest rates will be calibrated higher in order to bring down inflation, even if it comes at the cost of growth or employment. Nutshell, all theories about interest rates coming low at some point of time in 2022 or FY23 are out of the window, for the time being at least. Until the language changes, it is out of the window. Now, what does that mean for equities, right? Per se, the belief was that it's negative for equities, just that the markets didn't crack too much on Monday and the markets are doing really well on Tuesday. So people said, hey, this is probably yet another episode of the dip being bought into. The pessimists or the people who are not that constructive on that argument are making 2 or 3 points. One, that the scenario is different and the valuations are not cheap. So if you just look at the rally that has happened for the Nifty, right? Just the Indian markets, global markets too per se, but the Indian markets per se, that from the March highs to 17th June, because 18th June was the bottom that we made, March highs to 17th June, the S&P 500 corrected 20%, the Nifty 50 corrected about 15%. From those levels, the S&P 500 has gained 10%, the Nifty's gained entire 15%. So Indian markets have anyways had a bit of a plus there. Now, can that therefore mean that Indian markets could underperform? Very much possible. BofA Securities, in fact, a few days before, cut the target price of the Nifty to about 15,600, citing the very same reason of global recession. What could come to the rescue, though, is multiple things, including trade from India's perspective, because multiple FTAs have been signed with multiple locations, including UK, including EU, the Middle East, and Australia. The market depth, because we've seen tremendous FI selling, and yet the market absorbing it really well. Last but not the least, stable macros in India relative to the rest of the world. Hopefully, they come to the rescue if indeed there is a carnage-like situation in the markets. I hope this was informative. Thanks so much for tuning in.